The housing market crash that so many people have been talking about for so long is finally here. We're seeing prices start to come down in many areas across the country, and we're actually seeing massive price cuts where sellers are listing their homes and just within a couple of days or a couple of weeks are starting to slash the prices of their homes because they're not selling as quickly as they used to. And this is happening in a number of markets, but most notably in the markets that saw massive increases and are probably the most overvalued right now in the country. And then I want to double click into the data into two of those markets because there's something slightly different happening in both of those that I really want to share with you. So definitely stick around to the end because it's going to be worth it. And as always, before we dive into it, if you like real estate, finance, or business content, don't forget to smash the like button on this video and hit the subscribe button down below if you haven't already so you don't miss any of my future videos. So as a quick market update, since I haven't done one of these videos in a couple of days, pending home sales are down 10% year over year. And this is peak real estate season where we should actually be seeing the opposite. We should be seeing much more inventory hit the market, but also a much greater amount of sales and transactions happening because this is when most people are trying to list their homes and sell their homes during the summer months when they have time off from work and time off from school. And because pending home sales are down, we're seeing active listings, so the number of homes on the market are really starting to climb. And this is because people are continuing to list their homes, but just not as many people are buying them right now. And I think a lot of this is due to investor activity has really started to fall off a cliff. Interest rates have really hurt a lot of investors right now because prices are still pretty high. And we're also seeing these massive institutional investors who were buying tens of thousands of homes just a year ago are starting to drop out of the market because the performance of their companies is just not doing too well right now. Additionally, homes are still being sold on average in just 17 days, which is absolutely crazy. But this trend is reversing, and I fully expect by the end of the summer or into fall, we're gonna see that number climb significantly. And remember, changes in the real estate market take a long time to be reflected in the data. It's not at all like the stock market where you see things ebb and flow instantly, or crypto, not at all like that. Trends in the housing market actually take a number of months for us to really be able to see what's happening in the data. We're seeing all the changes from the interest rate spike back in March and April is starting to really flow through into the data now. And in this data, we're definitely seeing the housing market crash start first in a select few areas in the country. So let's go ahead and take a look at the data so we can see exactly where the price cuts are happening first. So we're gonna take a look first at this article from Fortune. Half of Provo home sellers just slashed their asking price. And these 19 housing markets aren't that far behind. And I love these first two paragraphs here. Even in a hot housing market, it's commonplace for some sellers to cut their list price. A seller might decide they want to test the market's limits only to learn they got a bit too greedy. It's sometimes even by design. That slash price tag, of course, makes buyers feel like they're getting a good deal. But if a regional housing market sees a huge uptick in price cuts, it usually means things are beginning to cool down. And that's exactly what we're seeing now. So back in May of 2021, the typical market saw only 15% of its listings have a price cut, but the typical market today is seeing 25% of its listings get a price cut. So a really significant increase. And of course, as I mentioned earlier, the regional housing markets that are seeing the most price cuts are in the places that soared the most during the pandemic. So take a look here at this graph, which shows the 20 housing markets that had the highest share of the price cuts. So Provo, Utah, almost 50%, Tacoma, Washington, almost 50%, Denver, Salt Lake, Sacramento, Boise, Ogden, Portland. So most of these housing markets are also on the same list of the most overvalued housing markets. And I actually already did a video on the most overvalued housing markets, so if you want to take a look at that, click the link above my head and it will take you to that. But really the gist of what it means to be an overvalued housing market is that price growth dramatically outgrew wage growth. And so once there's a real disconnect from wages, it means the people that live in those areas just cannot afford the prices of the homes that are existing. I mean, imagine if you're making $30,000, $40,000 a year and the average home is worth $600,000, $700,000, just comes to a point where people just can't afford to live there and buy those homes. You know, I've actually thought about this quite a lot. Why are so many people starting to cut the prices of their homes so dramatically and so quickly? And I think the sellers that are doing that are the sellers that just are really disconnected from reality. And they think the housing market is still on a trajectory like this. It's just climbing and climbing and climbing. And so, you know, they heard about their friends listing their home back in November of 2021, and it sold within a week for $100,000 over asking. And so their mindset is still fixed in that time period from 6 to 8 months ago when the housing market was truly booming and people were just listing their homes for higher and higher and higher. And people haven't really caught on to the fact yet that the housing market has truly started to slow down. So I think these people, and probably most unfortunately, they're misguided by their real estate agents, are listing their homes just way too high for what the market can sustain right now, especially given the increase in interest rates. And so they're listing their home expecting to get 24 offers within the first 3 days, and they're getting crickets. Nobody's contacting them. Nobody, people just balk at the price of the home because it's just absolutely ridiculous in this market. And so I think it's really those people that are starting to knock down the prices significantly and very quickly. And on the flip side, I do think that there are still a lot of really smart sellers out there, and that's why we're still seeing inventory being sold so quickly. We're still seeing homes sold on average within 17 days as opposed to 30 or probably 60, which is much more normal and realistic. It's because those people understand how the housing market has shifted and changed, and they're listing their home either at or below what the market rate should be, and those are still getting gobbled up really quickly. Now let's take a look at two specific housing markets because I really want to show you guys the data there because it's really interesting. So the first will be the Provo, Utah market, which is the most overvalued, and the second will be Denver, which I think is third on that list. And first off, we're starting with Utah, and just to orient you to the graph here, the black line is 2022, the orange line is 2021, and the blue line is 2019. I've removed 2020 here because of the craziness that was in 2020, so the data just looks a little funky, so let's just stick to these ones. So starting off with new listings, you can just see this absolutely massive spike here. So even here back in April, we could see that the new listings were really starting to outpace what was happening here in 2021. And then over the last couple of weeks, it's just absolutely spiked to where we're 90% year over year having more listings in Provo versus last year. So obviously inventory is starting to flood the market is the key takeaway here. And then the next important chart here is the off the market in 2 weeks as a percentage of pending home sales. So this is really the percentage of homes that are just selling lightning quick. And we're just seeing this start to fall off a cliff here to where we were above 70% earlier this year, and now it's only at 44%. So a massive drop off. We're getting close to 2019 levels. So the really quick selling homes here are just about returned to what it was normal before the pandemic. And of course, this is all contributing to massive price drops like we saw before. So this is a weekly share of listings with price drops. So you can see in 2020, it was basically no homes. I mean, we're talking 2% of homes had price drops each week. And now we're sitting at 13% have price drops. So a massive, massive departure from what we've seen previously. I mean, in this area, the market was so hot and you didn't have to drop the price of the home at all. You could just sell it for whatever you wanted, basically. And now reality is really starting to hit. And I think what's really happening in this market is earlier this year, in January, February, March, we had a FOMO for buyers. People were expecting and knew that interest rates were about to come in and increase and make mortgage payments just that much more expensive. So we saw a lot of buyers pile into the market, which temporarily inflated demand through the early part of this year. And that's why we still saw demand numbers and prices stay really high. And I think now that those buyers have already cleared out of the market, they've got their homes or they've left the market because they couldn't afford it. And now with interest rates being so high for so long, you're starting to see what I think is seller FOMO. So sellers are now starting to get smart and wisen up and realize in some of these areas that were, like Provo, Utah is a great example of areas that were massively overvalued. And so now sellers are trying to ride the last final wave of the massively inflated prices and sell the homes that they can so that they can get top dollar for those homes. All right, guys, so changing gears here a little bit, we're going to look at some very similar charts, but this time we're focused on the Denver metro. And you can see a massive difference here from the start. So new listings in Denver are not really spiking. They're just about where they were over the past couple of years. So we haven't seen any massive changes. But again, remember, Denver was one of the areas that had one of the highest price cuts. So what's happening here. And I think what it really is pending sales. So you can see here, it's just the buyers are dropping out of the market. And I think it's just one of those situations where it's not necessarily a supply increase, which is what's happening in Provo, is just the supply has massively shot through the roof, which is why we're seeing price cuts across the board. And I think in Denver, it's a little different because it's really a buyer issue. It's a demand side issue. So we're seeing people, frankly, just not able to afford the massive prices there with all the interest rate increases. And so because of that, we're seeing a massive drop in sales, which is then leading to price cuts. And of course, you can see here, massive price cuts, similar story to Provo, but where not a lot of price cuts over previous years, and then this year just massively increased. And just to articulate again what I think is happening in the market with the different mindsets of sellers, while we're going to see the price drops slow, we're going to see them slow not just because the sellers start to get wise and smart on what's happening with the market, but we're going to see prices start to come down. And then everybody's going to start to get on board and understand what's happening in the market, and people will start to price a little bit more reasonably because they're not expecting continued 20% year-over-year growth in home prices, which was what was happening over the past couple of years and is definitely not going to continue into the future. So again, if you're a real estate agent or you're somebody who's about to look for a home or in the market for buying a home, just remember to do your homework and do your research on the area. I mean, the dynamics of each regional market is changing so rapidly. I mean, gone are the days where the real estate market moved in 6-month to 1-year increments, where if you had the most up-to-date data from 6 months ago, you were probably just fine for your area. I mean, now, honestly, the markets are moving on a week-to-week basis. I mean, it might be a seller's market 1 week and starting to transition into a buyer's market the next week in your region. And honestly, we're starting to see that exactly what I showed you today in the data in a few of the markets. And we're going to continue to see this trend through other regions and other markets throughout the country as the housing market really starts to adjust to inflation and a potential recession and just the general craziness of the housing market bubble starting to pop. All right, guys, that wraps up the video. I really hope that it was helpful to you. If you do me a huge favor, like the video, comment down below if you have any questions. I'd love to answer any comments that you guys have. And don't forget to subscribe to my channel so that you won't miss any future real estate, business, or finance content. Thank you guys, and I'll see you in the next one.